Hello traders, Gary Wagner here. Just before 11 o'clock in Honolulu, 10:45, roughly in that area, 3:45 in New York. Markets are still open in terms of the equities markets. Last 15 minutes of trading, we definitely want to hone in on the close because we have seen one of the most dynamic sell-offs I have witnessed in the market, down over 400 points, 500 points in the Dow Jones Industrial Average, 3.5% drawdown, only to get much of that losses back as we go into a last hour rally in the equities markets. We'll look at that in a second. The opposite is happening with gold. Tremendous rally in gold, taking it to a record high today, an intraday high, of 1109. Currently breaking back below 1100 at 1099 and change. It has seen the market trade to a low of about 1087. Of course, that was much earlier today. And then lastly, crude oil, which is one of the major precipitating factors, the other one being economic slowdown in China, both of those being interrelated, of course, that trading off almost 7%, 6.71%, $1.91 drawdown per barrel at 26.55. So traders, as I've said, the dramatic sell-off in U.S. equities markets due to a slowdown in China, as well as oil under dramatic pressure. Now we're taking a look at a weekly oil chart, and here is our current print at 26.55, roughly in this area. And when we go back to ascertain the last time this market really traded to that price point, we now have to go back to about the second quarter of 2003. So we haven't seen this kind of pricing in quite some time. Dramatic sell-off in the market. Really, as we talked about yesterday, I don't really see on a technical basis any kind of real support in the market until we come to about 25, and there's analysts out there looking for the market to trade as low as $20 per barrel. Now, equities markets, this is a daily chart of the Dow Jones Industrial Average. The low that it traded to today, intraday low, was 15,450. We're now at 15,762. So we've seen it climb roughly 300 points off of the low today. Tremendous pressure, yes, but still very much off of those lows. And so when we look at our Standard & Poor's, and this of course is a daily chart in the Standard & Poor's, if you recall from yesterday's show, we talked about the fact that there were a couple of spots we wanted to see on a closing basis if those levels would hold. Now, the first level we talked about was 1860. 1860 as of yesterday was a price point that we had seen flirted with, meaning that we saw the market on an intraday basis hit these lows, but then trade back up dramatically off of those to close midpoint here, a third off of the low here, under pressure on both days nonetheless, but it did take these lows and was able to close effectively above them. The same cannot be said for today, because what we saw today was we actually went and tested this dramatic low, which is around 1813, and actually flirted with 1800 on the Standard & Poor's 500, only to close substantially off of these lows, moving up from 1800 to 1852. When you consider the kind of move that is, that means that we saw this market move up 45 points plus from the intraday low of the day to the close. And as I said, we're now at about 5 minutes to. And so what you can see is that although the markets are still trading, we have seen a lot of the ground that was given up earlier today kind of recouped. And so really what we need to ascertain as this dust settles is, have we seen the worst of it? Are we in a correction or a bear market? And that was really the dominant question we posed on yesterday's show. But before we get to the equities markets, do want to take a look at gold and the dynamic move that we have seen in the marketplace today. As I said, currently trading at about 1100. It broke through 1100. It is now back at 1101. And I draw your attention to this short-term chart that we have here. Short-term in that it is a 480-minute per candlestick chart. Basic fib retracement, which comes in from 1191 down to these lows at 1045. We put in our different levels, and the 61% retracement level is really that $1,100 mark that we have been watching. The next real level above that doesn't come in till about 1118, and we didn't even come close to that today. But here's the thing. You can see that this market came up, hit this intraday high of roughly 1110 right in here, but it's difficult to see this candle. In fact, I'd have to kind of uncompress it. But we've got a pure doji at this point in which the open and closing price of this candle, it's not a daily candle, but of this candle is about the same. So it has come back to where it opened roughly 480 minutes ago. Which brings us to our discussion that we began on yesterday, and that was really of the alternative wave count by a gentleman by the name of Deneric that we talked about. We're going to look at that chart in a second, but the first thing that we can say when we take a look at these last series of lows is without a question of a doubt, we have had a series of higher lows. We have had a series of higher highs here. We're not done yet because we don't know if it will continue and then break above this 1110. Because if it does, it really brings into play the particular wave count that we talked about yesterday, which was the wave count looking at that top as a major fifth. And I've just gone ahead and brought that particular chart up in which we have this wave count. Now, the wave count is assuming we have a major fifth. We are now in a long protracted A wave. That A wave consists of a 1, a 2, a 3 count, like an ABC in terms of the way it moves down. Then from there, we get, as I said, a diagonal, a triangle count for waves 4, and then again for waves 5, and that would of course complete A. And so we'd have 1, 2, 3, 4, we would conclude 5, and then that would conclude not only our subcount and our intermediate, but more importantly our major, which would mean that we would be going into a protracted rally as opposed to a protracted correction and sell-off. Now, what would be the determining factor that in fact, that is how this market is unfolding? Well, we really would want to see the following, and that is that if you take a look at these series of tops here, which create 2 and 4 in terms of the subcount wave count, a break above that, that would signal something I believe really, really strong and signal a protracted rally. And what I mean by a protracted rally is that although you'll have peaks and valleys going into the marketplace itself, up days, down days, up weeks, down weeks, the net change overall will be bullish, positive, and higher pricing ahead. We're still not at this particular price point, but I do hold some merit to this particular wave count in that it does seem more logical than many of the wave counts I've looked at. And the fact that they're looking at this as a major fifth, to me, seems very logical because, as I said yesterday, it's something that I have debated in my own mind for the last couple of years without a question of a doubt, especially since this market has come down, and that is a historical and record high. So traders, where does that leave us? And most importantly, what can we look for in terms of where we think this marketplace could go over the remainder of this week into next? Looking at a daily chart, it is a bar chart. We absolutely, as long as we're staying above this level, this is now, I believe, this lower trend line is absolutely support. Resistance is still in at 1100, and I'm purposely moving this arrow up because you can see that that is currently where we're fixing our price at, 1101.28. So we are right at that area. We talked about the fact last week before the long 3-day weekend that we have had the beginnings or the makings of a real basic and strong breakout in the market. And at this point, I think that we can say with some certainty that an effective close, which it looks as though we will have above 1100, is going to signal a entry point in the market from the long side. This market, though, has contained so much volatility, a volatility that we haven't seen in quite some time, that to me, it is safety first, so to speak, before we enter any positions within the market. But I think that overall, we will see a continuation in terms of value gained within gold itself. As far as equities go, we've had no real confirmation that we've hit any kind of a bottom. Now, the one thing that we can say is that if you recall the August meltdown, the actual turnaround came quick, and it just came like a wildfire. You had the first spike, then you had some activity where it was difficult to figure out because it started to trade sideways, this in September. As we got to the end of September, of course, we had that secondary low that came in at around 1860, and that, of course, was well above that 1831, and from there it was off to the races. So the question is, will we see something similar happen here? Now, we've taken out on an intraday basis that low of 1830, but we have certainly closed well above that. But I'm not convinced we're out of the woods yet, but it's certainly, these are the areas, as we talked about yesterday, that we absolutely want to look. And then lastly comes crude oil. I still think that crude oil will fall to about 25 before finding some sort of support. We're a lot closer to it today than we were yesterday. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow on Thursday for another daily update review. Bye-bye.